Well, people have a complicated relationship with money. That's the point. All right. So in today's conversation, I want to talk to you about a no-doc business loan for a large amount, 7 substitute documents that lenders always accept to get you approved, come rain or shine. Don't you go anywhere. You're going to love today's conversation. I guarantee it. Bye, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about a no-doc business loan for a large amount. 7 substitute documents that lenders always accept to get you approved, no matter what. So basically, the context is very simple. So you're looking at a no-doc business loan for a large amount, and you don't have proof of income, or you don't want to have, no documents, okay? The thing is that there is one substitute document, or 2 or 3. It doesn't really matter. It depends on the nature of your business and depends on the loan amount. But there is one substitute document that you have to provide for the lenders to actually approve you. Okay, so I'm going to give you, there are 7 of them, but you can pick and choose which one you have, and that should be fine. The first one is your tax returns. Okay, so when we talk about your business tax returns, that is, so if you don't have no income, no proof of income, or no balance sheet, or no financial statements and whatnot, you can basically tell the lender, hey, listen, here are my tax returns, okay? So it's important to keep your tax returns because you want to monitor the progress of your business. You want to prepare, the tax returns can help you someday prepare your financial statements. If you don't have an accounting system in place, you can identify sources of your income. You can keep track of your deductible expenses. This is very important. You can keep track of your basis in property, for example, okay? You can actually, I think is that there are actually some items that you can substantiate on your tax returns if the lender wants to see you. The bottom line is that lenders will actually attribute a lot of credibility, okay, to your tax returns, to your business tax returns. That is, to your 1065, to your 1120S, to your 1120C, in case you have a C corp, or to your sole proprietorship. In other words, 1040 Schedule C. The thing is, but I want you to really be a business, to be a legit business. So have an 1120S or a 1065. Okay. So tax returns are great. They allow you to prepare your financial statements. I'm talking about income statement, balance sheets. You can identify your sources of income. It's important. You can keep track of your deductible expenses. You can keep track of your basis in property. One thing I want to say is that, and also that will help you finally, in the end, prepare a legally compliant, there's some tautology here, a compliant tax return. Remember, filing your tax returns, either business or personal, is a legal requirement, okay? And the thing is that the importance of a small business corporate tax and reporting is that basically you are able to file a lot of taxes, sales tax, unemployment tax, use tax, withholding taxes, okay? And this is important. Also, you have you comply with the law. That's the bottom line. If you don't have any other documents, the second paperwork, the second piece of paperwork that you can actually provide, boss, I'm talking to you, is bank statements. All right. Let's say you have no idea how to prepare financial statements. You have no idea. You haven't filed tax returns yet. You can actually rely on bank statements. I'm talking about business bank statements. Did you hear that? Very important. You can probably just have the last 3 months. That's okay. Okay. And you want to have bank statements because this allows you to keep your personal and business finances separate. We have talked about this before. That segregation is really important. You want to segregate your personal affairs from your business affairs. Okay. You having bank statements also allows you to keep clean and accurate bookkeeping. It's very important to prove that your business is not a hobby. It's important. If you're looking for a large no-doc loan amount, the lender better believe that your business is not just a side hustle. It is a legit business, okay? You are able to actually to have an account that is separately logs your expenses, which is really great in terms of I would say tax filing come year end, right? Because we are talking about what, boss? We are talking about having a clear audit trail for the IRS. So if they want to audit you, and it just looks professional to have a business bank account, okay? And you can use your business bank statements to convince a lender to lend to you. In other words, the lender is going to see your cash inflows and your cash outflows, because at the end of the day, it's all about cash inflows and cash outflows. We care about income. Yes, we care about balance sheet and all that kind of great stuff. But the bottom line is, can you repay me back? If I lend you, let's say $500,000, can you repay me back? That's the question. That's the primordial question, if you were to ask me. Okay, so it allows you to apply for a loan. It allows you to reconcile your bank statements, to track uncashed checks, to budget for your business. I'm talking about a bank statement. Okay, it allows you also to find errors and unauthorized transactions. It's very important. And remember that business bank accounts are required for all types of businesses. Okay, whether you're an LLC, LP, C corp, S corp, and whatnot. And sometimes business bank accounts offer more services. That is just true. Okay, and those accounts, by the way, make your accounting a lot easier. So if you're out there just listening to me and you have no idea how to set up your business accounting, start by having a business bank account. If you have no documents and you're looking for a no-doc large business loan, you can provide electronic sales. Did you get that? Electronic sales. So let's say you have a business and you accept credit cards or debit cards for that matter. So that leaves a trail, right? So the credit card company, the credit card processing company, will send you a statement every month or every week, depending on the schedule that you have set with them. The thing is that paper is wonderful. Oh yeah, boy, it's very important. You never want to toss it away. You want to keep it. It's kind of similar to a bank statements, if you were to ask me. So basically, if you accept credit cards, the processing company will send you an electronic sales statement, so you're able to prove to the lender, hey, listen, here is I'm grossing 10 grand a month, or I'm grossing 20 grand a month, or 100 grand a month. Here is a proof, okay? And so there are many benefits of businesses accepting cards, because if you accept cards, you are showing the customer that you are a legit business. Why? Because no hobby, nice side gig will accept credit cards, because for you to accept credit cards, that means you have gone through the due diligence required by the credit card processing company. Okay, so you're able to legitimize the business. You're able to boost sales by accepting credit cards. You're able to eliminate the risk of getting bad checks. Yeah, you're thinking about allowance for doubtful accounts. Nobody want to have clients who don't pay, so you are just charging on. You just accept credit cards, so you get your money right away. Of course, minus the 3% or 5% fee from the credit card processing company. But you're able also to improve your business's cash flow. This is important. I spoke earlier about cash flow being really important, right? I mean, the bottom line is that the lender wants to make sure that you have the cash inflows and cash outflows. Honestly, if you can show electronic sales statements and your bank statements, that's a lot for the lender already to judge your company's liquidity status. Okay, and accepting business credit cards also provides your business with a level playing field with competitors. Okay, and remember that overall, based on our analysis, credit cards are reasonably inexpensive to the business. I mean, the fees there, the processing fees there, but honestly, it is just think about it as a processing expense. Think about it as an operating expense. If you have no documents and you are struggling to find out how to really convince the lender to give you the money you are looking for, a large amount that is, you can use forecasted data. I'm talking about projected financial statements. Okay, financial projections are a crucial aspect of the core small business plan, especially for startups. If you are a startup and you have no revenue, or you have no way of proving the revenue that you have, or let's say you are an established company and you have no way of proving your income, of proving your revenue, think about forecasted data. So when I speak about forecasted data, I'm talking about projected data, projected financial statements. Okay, it's very important because, but the thing is, I'm not telling you here to show something unrealistic to the to the lender. Don't don't build unrealistic scenarios based on unrealistic trends in the industry and whatnot. No, we are talking about making sure that you provide suitable, substantiated data to the lender. Okay, it's important. Don't try to razzle dazzle the lender with some data that you can't really back up. If you're new to this exercise, I really advise you to hire someone. Okay, and again, it's not really that expensive. You can find people on Fiverr, on freelancer website, on Upwork, on freelancer.com, on TopTal and whatnot, or you can just hire somebody locally to look at your numbers, to look at your business, and actually come up with numbers. Okay, there are benefits of financial projections. You can receive the loan that you want even if you have no revenue. You can actually prepare for expenses and revenue based on supply and demand patterns in the market. You can establish goals by developing intentional commitments for long-term success. This is really important. You can set up points of achievement to ensure your business is growing as predicted. You can compare the development of the market with the rate at which your business is flourishing. We call that variance analysis, right? So you are basically comparing what you have projected versus the actual data. And it also reveals growth deviations from your projections early on so that you can efficiently mitigate any concerns. So, cuz, mother, father, sister, brother, what I'm trying to tell you here is that you want to have financial projections if you cannot prove your income. Okay, it allows you to actually have a better way of getting the loan you want. It allows you to create a budget that is congruent with the long-term objectives of your company. All right, it allows you also to evaluate and update your budget regularly. Right, you can measure your budget against your goals. We talked about that before. We're talking about variance analysis. Okay, you are able to actually use short-term budget for immediate plans. Fantastic. Another substitute piece of paperwork that you can show the lender to get your no-doc large business loan if you have no way to prove income is to show them your sales contract. This works fantastically. We have tried it several times. It always works. The thing here is that you got to have first of all a legal sales contract. That's kind of tautology, but you got to have a proper sales contract, and the clients must be a solid clients. Okay, I mean, if you're telling me that you have a sales contract with ABC company, and ABC company is struggling itself, the lender is not going to pay credibility to that contract. You want to have a sales contract from a legit business that is solid from a liquidity perspective, from a cash flow perspective. Okay, and this will work. This will definitely work. You just show them the contract. Hey, listen, I just signed a $50,000 contract here. Okay, I may not have a proof of income, but I have a contract, a legit contract that shows that, hey, listen, money's going to come into my business. Okay, so you better lend me the money because I will be just rolling in cash real soon. Yeah, and this works all the time. And beyond that, beyond the ability to convince the lender to give you the money you need, a sales contract also prevents miscommunications, provide details about the transaction, provides legal backup, gives you a working document. In other words, you can see on the sales contract, you can see the loan amount, not the loan amount, the amount of the transaction, the parties involved, the payment schedule, and all that kind of wonderful stuff. Okay, and so when we talk about sales contract, you have to understand this is a contract that identifies the seller, the buyer, goods or services, and other important terms. And you always want to have a sales contract. If you have a large amount, it's important to have a sales contract. Okay, and there are a lot of benefits of using a sales contract. It really depends, but they really help you show that you have cash coming in. Okay, it shows a lot of things beyond that, but the payment plan, the identification of the parties, the description of the services and or goods, okay, and the delivery, the inspection periods, the warranties, Very important. And in some cases, there are miscellaneous provisions. And this is kind of cool too, because you have the governing law, the severability, the confidentiality, okay, the breach of contract, notices, and amendments. So when we talk about severability, this provision is made to ensure that all other provisions are still valid and enforceable, even if part of the contract is unenforceable or invalid. Okay, it's called severability. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Studio Kiwi Show. We are still having a conversation today about a no-doc business loan for a large amount, and I'm giving you 7 substitute pieces of paperwork that you can actually show the lender if you can't prove income for whatever reasons. Okay, the number 6, the sixth piece of data is the due diligence data. Okay, let me break it down because this might sound like very fancy, DDD, triple D, whatever. Due diligence data. So what is due diligence first? Due diligence is a process of verification, investigation, or audit of a potential deal or investment opportunity to confirm all relevant fact and financial information, okay, as well as to verify anything else that was brought up during an investment process. And sometimes you hear about this also during an M&A deal, a merger and acquisition deal. Why am I bringing this here? Well, guess what? Let's say your company is about to be merged with another company, or somebody wants to buy the company, and you were able to get a due diligence process in place, or you just by yourself, you just want to have more certainty about the business, then you can order a due diligence report. Okay, and this is kind of cool because it provides more credibility to the business. Okay, and so when we talk about reasons for due diligence, there are several reasons for the process. You want to confirm and verify information that you see in the business, to identify potential defects in the deal or investment opportunity, to obtain information that would be useful in valuing the deal, to make sure that the real transaction here, the real deal or investment opportunity complies with the investment or deal criteria. This is if you look at things from an external point of view. But again, like I said before, you can actually do it internally. Okay, in other words, endogenously. You are basically getting the deal yourself. You just want to have clarity about what's going on in your business, and that always works. Okay, that always works because in a due diligence report, you have a target company overview, you have financials, you talk about the report talks about technology and patents, if there is a strategic fit, the target base, the management workforce, okay, legal issues, IT issues or IT solidity, corporate matters, environmental issues, production capabilities, and marketing strategies. And due diligence matters a lot because, again, it matters to you, the business owner. It may matter also to a lender who is considering injecting a large amount of cash and doing a large cash infusion into your business because it provides credibility. Because a due diligence report is usually done by a third party, not yourself. So if a third party does the report or works on the report, that's fantastic. The seventh and last piece of paperwork that you can actually show a lender if you don't have a proof of income or any other financial reports, and you're trying to get a no-doc business loan for a large amount, is if you have press mentions. Okay, so what is that? Well, anytime your name is cited in the press, anytime your company's name is mentioned in the press, that's just fantastic publicity. Think about it. Basically, you want to have a positive publicity, though. So you don't want to have bad press and just bring it to the lender, though. You want to have positive press. You want to tell the lender, hey, listen, I'm in the news. My business is just, we're just rolling in the cash, or we're not, maybe not rolling the cash because we wouldn't be needing a loan, but you just want to tell the lender that, hey, there is buzz around my business. And this is important because if you are able to convince a lender that your business is one that counts, once that is popular, either on social media or in the press, that's just fantastic, okay? And the thing here is that that's why anything you do, any important updates, any important news, any important piece of news, you want to contact the press to make sure the press covers the matter, okay? And the thing here is that press mentions are a great way to complement your content marketing, to complement your advertising, because press mentions, if you think about it, that's just free advertising, right? Call a local reporter, tell them what's going on in your business and why they should cover you. And a press mention also boosts credibility. It extends your brand positioning. It fuels the content fire. Okay. And the cool thing is that you can actually leverage press mentions for the long term, because they have a long term value. Remember, the getting those press mentions is not the end of the road though, because this quick wins can and should be leveraged to maximize the value of your public relationship, of your public relations strategy. And that's where the juice is. The juice is in your PR strategy over the long run, okay? So there are a lot of ways to get media mentions for your business. Press releases. You can reach out to reporters directly. You can notify local news stations when you host an event. You can have a Facebook video. You can have boosted posts. You can use the right hashtags. You can have a guest blog. You can have networking events. All this, this constellation of events, this constellation of initiatives is really good, really, really good for the long-term standing of your company, and also helps you a lot get the loan you need and deserve. Thank you so much, boss, for your attention to this conversation. I was just talking to you about no doc business loan for a large amount, and I was giving you 7 substitute documents you can always show a lender, and a lender will love it. They will agree. They will approve your loan. Okay, you have tax returns, business tax returns. That is, you have bank statements, electronic sales statement, forecasted data, sales contract, due diligence data, and press mentions. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.